Good Wednesday morning to you people. It is February the 21st and we're about 10:32 here in the Central Time Zone. I just wanted to give you all a little quick update, and I'm going to get together another video with quite a few trade setups here in just a moment. But just for the time being, I wanted to update you on the markets and the index, the S&P 500 where we're starting at, of course. If you take a look here, we are still looking at that 618 retracement level that we had talked about, and so this is still the area that we want to be selling against. And in fact, yesterday I started in my IRA, actually two different IRAs, and started selling longer term holdings, just as a, kind of take some risk off the table. Now that's not to say that the markets can't keep going higher and you lose a little bit or you leave a little bit of money on the table. That's very well possible, and we're starting to see that the moving average is wanting to flip back to the bullish side, but we have not cleared this 618 retracement, and we were able to get above the 50-day here and stay above it here, and then we lost it on this day. So right now we're on track to get back above it, but between this 50-day right here and this 618 retracement, I think you just have a little bit of resistance here that's going to ultimately push us back lower. So what I'm expecting is the market to kind of maybe bounce around here for a moment before we start to decline, and if that does not happen, then we'll start looking for a pullback to reposition ourselves for the long side. And actually, we'll go ahead and put that on there just real quick so we can see what it looks like. If we were to end up being going to the upside, let's see, let's go ahead and get this retracement in here real quick so we can see it. So if we were to dip, then this is kind of what the setup would look like. So we'll be looking for a pullback to the 618 retracement, and we'll be pulling back from here. Pulling back to the 618 retracement before we go higher, or ultimately that we just end up failing and we start doing one of these little stair steps down. So that's kind of a possibility as well. So I think that ultimately that this is the correct direction. There's just too many risk abound, and the upside is too limited at this point. So the other one we'll take a look at real quick is the Russell 2000, because it was in a similar situation as the S&P. And it's kind of running into that same 618 retracement. We can stick it on there just so we can see it. And as you see, pretty much right there, we were running right into it. So, and it's combined with the 50-day moving average as well. So we have a lot of overhead resistance right through here. And like right now, we're actually peaking above those levels. So if we can hold up here, then a little bit different story. But if not, then and which I don't think we will. Like I say, we've got the moving average cross here. This swing high could be considered right here as being taken out, and that was one we were watching on the hourly chart for quite a while. But I think that, like I say, that this thing just ends up bouncing around and then ultimately comes back to the bottom side. On the other side, though, is if it does decide that we're going to go higher and we can kind of say break up to here, then we'd be looking for a pullback to the 618 retracement before we started looking to the upside again. So that's the Russell 2000. Again, I think you're pretty much right in that zone, 1548, 1550, that you need to be selling into. The Dow Jones Industrial, it had not fallen quite as hard as the S&P or the Russell, so it is still sitting below its 50-day moving average. We were able to spike above the 50-day right here, but we have still remained below it. So this one, and also we have not touched the 200-day moving average at all in the Dow Jones yet. So not that we have to or anything like that. There's no rule that says the 200-day has to be touched, but I'm just kind of thinking that we will ultimately end up checking it, because it's been quite some time since we have. We kind of look back here and we can kind of figure out when the last time we did touch it was back in, let's see, June of 2016, so almost 2 years ago, or a year and a half ago at least. So like I say, I think that we ultimately will come back in here and touch this thing and test it. So that's what we're looking for in the Dow Jones and the NASDAQ, of course. Same situation. They're all pretty much in the same boat here. NASDAQ fared a little bit better than did the S&P and the Russell. It didn't quite make it down to its 200-day moving average yet either, but it does decidedly have the moving average cross. We've taken out the swing high right here. So now we'll be looking for this one to continue, but at the same time, like I say, I don't think that just because this one looks a little bit better at first glance, I don't think that it will ultimately rally while the S&P falls. So I think all these things will act in tandem. So like I say, I think that this is one of those other ones too that'll eventually decide to roll over on us. And if I'm wrong on that, or if we are going to continue higher, you know, absent some continuation straight to the highs, we should be in the position where we start looking for a pullback of some degree. So that's kind of how we will be looking to play this thing going forward. But overall, I think that we just need to continue to sell into this zone that we're into, and expecting a decline from there. Okay, the VIX real fast. You know, it has subsided quite a bit from where it was at in previous weeks. We were back down below that 18 level. We had kind of talked about it the other day, and we'd mentioned that, you know, we'd like to see a decisive break below that, because it's kind of been an area that's been, you know, we went up to it and then it acted as support the next day. And then we have fallen to it and tested it a few times. Now we're pretty much right back on top of it. I think it does end up giving way to lower prices, but if the market falls out of bed here, then obviously this is going to start going to the upside. I do have some VIX calls just in case that happens, but also have some puts on VXX for March that I think will end up working out just because of the nature of the ETF products. So I bought the 35 strike puts for March expiration, so that puts us down to here by March. But that doesn't mean that we can't have one of these numbers happen. So be kind of looking at that for the VXX or the VIX, either one of those you want to track. And then this little trade update real quick I wanted to look at. We had talked about PG, and so it has continued to just kind of move sideways here. We got our buy signal here, and we decided to jump in. So I bought the 80 strike calls. I think I bought April expiration. So I think that this one will eventually recover back here, and so I'm going to continue buying this one and owning this one. Kind of my support level that I'm watching is obviously this low right here that's been in place, and then if we look down on an hourly or 15-minute chart, we can also see that, well, so on this hourly chart we had this moving average cross, but we have not taken out this swing low yet. So right now, as it stands, we still have a series of higher highs in place, and higher lows and higher highs. So right now the tape, even though it's starting to look like it wants to roll over, I think that it's going to be okay, and I think it's just a pullback to consolidate this recent bounce higher, and we're about to set the stage for a move to the upside. So that's PG for you real quick. And the other one that we had talked about just real briefly, I don't want to go ahead and mention it to you because it is still getting beat up today, is Walmart. Now Walmart got crushed yesterday because of an earnings report, and the earnings report was actually, it beat expectations, and revenue beat and bottom line beat. So I just, actually I don't think the bottom line beat, but the one thing in that report that everybody was so upset with or disappointed in was the online growth, sales growth last year, or last quarter rather. It was growing at a 50% clip, and then going into the fourth quarter, which is a holiday quarter and typically a strong sales, the growth fell to 20%, so they've lost half of their momentum and growth online. So that's caused investors to shun the stock a little bit. Now the stock has pulled back from above $100 up here and stuff. Now it was actually it ended up closing yesterday down 10% move. That was the biggest move Walmart had seen in 30 years. So you know, this thing, if it wants to continue to the downside here, I told you all that I think that this 200-day moving average may be in play here. And we also noticed that we had a trend, starting a rising trend channel here that's going to start coming in play just beneath that moving average set up there at the 200-day. So I think that either way, that you want to start looking to buy shares of Walmart though, because I think that it's ultimately they'll be fine. So I think that you can go ahead and start dabbling into it, buying, you know, say like a quarter of your position or something like that. And I've already jumped into a call spread. This didn't work out so far because shares have gotten beat up. I bought the 96-101 call spread, thinking that it would bounce after yesterday's massive sell-off. Obviously, I was wrong on that, so I'll be kind of looking to reevaluate that setup and figure out something different for Walmart. But I think from a share standpoint or from an investor standpoint, that you get a good price here on Walmart to go ahead and start buying into it. So any dip back down to that 200-day mid-80s, I think is a good safe zone to be buying Walmart. So, all right, like I said, I'm gonna get together a video with a little bit more of the updates and stuff. I just wanted to give y'all a quick market update real quick. And so, like I say, I'll have some trade setups for you. I just wanted to, real quick, I'll mention I exited Pandora yesterday at the close. They report earnings today. I had bought it, sold it now. So I have dabbled in and out of this thing, but just the way it acted yesterday going into the close, it kind of started acting like it wanted to be weak, so I'm glad I did because today it's down. So I'll be looking to buy those calls back to get a little bit of exposure going into earnings release after the market closes today. Okay guys, y'all take care.